Good evening, Clifford, the 25-year trader, back with another Sunday night futures market open, starting now. Okay, so welcome back to the channel. Sunday night futures market open. Wow, what a week it was last week, huh? Crazy things happening. I tell you, trading, during times of uncertainty is not easy. Let's see what we got on the schedule this week. So first thing, and trading during a war is very hard, but we're going to try and see if there's any opportunities out there that are still trading opportunities, because even during times of uncertainty there are still opportunities. So let's take a look. Okay, forexfactory.com. If you don't know this website, definitely put it on your bookmark list. It's great for seeing all the news releases coming up next week. So here's Sunday night. Best time to look at the market is right when it opens, before all the craziness starts Monday morning at 9:30 a.m. So as you see, Sunday, Monday, not much going on Monday. Tuesday, some European news. I like to look at the red ones, flash PMI. That's going to be definitely important for Great Britain as well as Europe too. Australian CPI on Tuesday. That's if you're trading the Australian dollar, you want to be aware of that. PMI here as well, 945 on Tuesday for the United States. Unemployment claims on Thursday. And finally, retail sales on Friday for Great Britain. So, not a whole lot going on this week. Last week was the real big week. We had the Fed come out and we had so many different news releases. So what actually happened? Well, if you didn't notice, there was a lot that happened last week. So let's start first with the COT report, because that's one of the most important things you want to see is how these traders are positioned in the market. So let's take a look first at the stock indexes. Pull up my COT report here. So on the Dow, they're kind of neutral. They were really short the Dow here back in November, but they really got neutral. On the S&P, however, they were short, and this is going back till December all the way to January, February. They started cutting their short positions, but as we see last week, they went from 134,000 short selling contracts. They cut it a little bit to 115,000. I don't think that's necessarily bullish yet. For it to be bullish, definitely oversold, overcrowded short would be bullish, but not in this environment, I don't think. Let's see the NQ, NASDAQ. They're kind of like a little bit long here, but just starting. But they're not overcrowded long like they were here. See in October, they were overcrowded long. So not much going on there in the equity positioning. But let's see the commodity market real quick. So here's oil. So this is a big one. They are long, right? We know they're long. Back in February, 170,000 contracts. And then the week before, 220,000 contracts. They still kind of long at 200,000. And as we see, the rally is continuing due to all the uncertainty. And this is, what is this, light crude as well as Brent. You can check gasoline as well. It's good to see what's going on with the unleaded gas market. And as we see here, they're pretty much long all these energies. Natural gas, I don't really trade this one, but it's good to watch too. Gold, as we see, they're kind of cutting back some of their long positions, 245,000 down to 158. But, we'll have to see where that goes. Bitcoin, so they kind of increased longs from 1,300 long to 1,700 long. Let's keep going real quick. Euro, kind of long, not as much now. Let's keep going. British pound. So British pound, they were short. I mentioned that last week. But again, the dollar is strong right now. Yen, they're a little short. Canadian dollar, Australian dollar, a little bit long, not too much. Swiss, this one I was watching because they are actually overcrowded shorts here on the Swiss. So if the dollar, let's say really starts to weaken, you could see the Swiss catapult to the long side. because these shorts, what happens is it's like a short squeeze. Their stops are getting hit, so they have to buy to get out, which causes the market to rally hard, but not yet. Let's see the dollar. Here they were really oversold the dollar, but now they're long about 3,400 contracts on. Okay, so not much going on there. Finally, let's take a look at the grain market. This is the corn. I do watch these as well. Looks like they're really long corn, but they're not overcrowded long yet. Overcrowded would be like here. See this back in February, 465,000 positions long. They're about 300,000. So they're definitely building a long position in the market, but I don't think they're overcrowded yet. Real quick, soybeans. See now, soybeans, they are overcrowded. And look what happened. It already pulled back. Why? Because at one point, when the market keeps rising, 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 I mean, buyers, 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 but at one point, who there's buyers dry up. Who else is going to buy when they're so long the market? There's no other way but to start closing their longs, which causes the price to fall, right? Over in the wheat market, real quick, same thing here. See, they were overcrowded short. Market rallied as well. And finally, in the bonds. Bonds are interesting because they've been short a very long time. And that is something very interesting because if they continue to stay short the bond market, you know, that tells you that there no one wants to close the short positions. So that's something to be concerned with. All right, so that's the COT. Moving on to the technicals. So last week, Dow is definitely in a downtrend. This level, okay, wait a minute, Dow, let me see. Yeah, Dow's in a downtrend. S&P 500, this is a big one. Last week, I was watching this level. I had mentioned that in my previous update, support at 66.35, cracked right through it last week and closed below that level. That is a significant bearish sign. I would not be long this market at the moment. I mean, people who try and buy here, they might be able to catch a quick move back to resistance, but I believe the sellers are waiting here. I wouldn't actually be bullish the stock market right now unless it really in the future breaks above 6,800. Maybe then I would go long on a pullback. But at this moment, I'm definitely bearish. Me personally, I would sell this resistance right here, maybe at what is this 66.39. Put a stop loss above this high right here, and wait for the downtrend to resume. At least that's the way it looks from a technicals perspective. Same thing with NASDAQ. Same thing with Russell. They're all breaking support levels. What else we got here? Technicals on oil. Definitely overbought. Could it pull back? Sure. I mean, but even if it did pull back, I think this support level will hold right here, 88. I think the buyers will step in. If I was going to be bullish oil, I would be willing to buy maybe a small position here at 88 and, put a stop loss maybe like somewhere that you hopefully don't get stopped out, maybe like down here by this support here. Um, yeah, I would say that looks like a decent trade. I don't like to buy the high. I like to buy it when it pulls back because, buy low, sell high, right? Same thing here, $88. Over to the gold market. Interesting enough, gold is pulling back hard, which, a lot of people, I believe, felt that gold was going to be the safe haven, but it depends because sometimes the flight to quality is in other places. It appears the dollar right now is the safe haven, which we'll get to in a moment. Let's see, silver, not much. Bitcoin, still just consolidating there. All right, let's see the euro. See, the euro's been getting bullish because the dollar has been catching what's called the flight to quality. A lot of shift is going into the US dollar right now. Let's see here, the yen, we looked at these. Yeah, pretty much they're all kind of just strengthening a little bit against the dollar. But this is important here. The dollar is strengthening. And in times of uncertainty, it's known that the investors, global economy, they can decide to put their money into wherever they think the safe haven is, right? So sometimes it might be gold, but other times it might be the US dollar. And in this case, it's definitely showing bullish signs. We had a rally from January. Ever since January this year started, dollar's been on a tear to the upside. But look at this. It closed above resistance. That's a bullish signal. That's a signal to buy the dollar on a pullback. However, see the support level here, $99. It tried to close above it, but it kind of got some rejection. So if that support level continues to hold, then basically the dollar is the safe haven. And that's why you're seeing, now sometimes, I believe sometimes gold can rally if the dollar rallies, but usually when the dollar's rallying, it'll push commodity, like precious metals. They usually have an inverse relationship. So it's interesting to see. Now we see the dollar rallying, gold selling off, whereas last year, I believe, towards the end of the year, we actually saw the gold run and the dollar run with it a little bit. So, you never know for sure. But let's move on to the grains. Grains, I'm definitely bullish because if oil is continuing to rise, that's going to cause more demand for the grains, especially corn, because for those who don't know, they use corn for like ethanol and everything like that. So ethanol usage increases more demand, especially as energy prices continue to rise. What else we got? Soybeans as well, wheat as well. They kind of all are moving in tandem with demand. Also, this is the time of year where grains. There's a big report on March 31st for those who are following the grains. March 31st is the biggest planting intentions report, I believe, every year, and that sets up the whole planting season. So if anyone's interested in the grains, I could definitely do more videos about those in the future. But other than that, and then we got the bonds. So like I said, bonds are selling off hard last week. And what this means, in my opinion here, is that so investors are demanding a higher yield to hold these bonds. I do watch the yields a little. I'm not a bond expert by any means, but I do watch the yields, and I see the 2-year and the 5-year and the 10-year yields rising and the 30-year. And I saw this high back here back in May of last year. It hit 5%, and it seems like ever since it hit that 5%, investors they didn't let the yield fall lower than 4.5 here. And all these dips have been bought on all these yields keep rising. So, I mean, no one's got a crystal ball, but I believe that the bond market is kind of like the barometer for the economy. So you want to pay attention to the bond market. Again, I'm not a bond expert, but I do know that if interest rates rise, bonds and interest rates have a inverse relationship. So for those who don't know, if bonds go down, then that they believe that the interest rates are going to continue rising. If bonds are going up, that means interest rates would be falling, kind of thing like that. So definitely keep an eye on the bond market because this signals serious volatility coming. Because if investors want a higher demand for their bonds, then either it's that could spill over to the stock market, and as we see, it already is. Just look at this right here. I mean, if oil hits this number again, $120 a barrel, it's going to cause us serious volatility in the stock market as well as the bond market. I wouldn't be surprised to see the S&P 500 if that thing continues to rise, which it probably will. We could definitely get a 50% retracement probably here at 6,100. That wouldn't be surprising for me. But yeah, so that's all I see for this week. Again, check out Forex Factory. If you're a Forex trader, you definitely want to watch these euro, pound, dollar reports this week if you're trading any of these currencies. But as far as me, to summarize for this week, I'll just be watching, me personally, I'm going to be watching a pullback here to this resistance level at 66.39. And if I get that pullback, I will probably enter a small short position for the S&P. And I'm also going to be looking to trade the grains on a pullback this week. That's me personally. Of course, it's not a trade recommendation, not a buy or sell recommendation, just what I'm doing personally. Of course, everyone should, trade at their own risk and make sure you always use risk management. But me personally, I will, if corn pulls back here to about 458, I would buy that because I believe it's a good trade, and I'll put a stop loss maybe down here at about 10 cents and target these highs for like, maybe 20 cents or higher in the future. So that's about it for the video. If you like the video, feel free to like, subscribe, put your comments below. Look forward to seeing all you guys in the next one. Have a great trading week. Be careful out there. These are, difficult times to trade. Never risk more than 1 to 2% of your equity on any given trade. That way you can survive, your drawdowns in the long run. And once again, my friends, I'll see you guys in the next video. Have a great trading week. Bye for now.